Hi, this is Mark with ValueCharts.com. One of my favorite trading signals is trendline breakouts in the gold market. For some reason, the gold market really has a propensity to surge through well-defined trend lines. This is a trend line that we've been tracking for the past several days here, and you can see on a 120-minute chart, we're connecting a lot of highs, very well defined here until last night, where we finally saw earlier this morning a very nice surge to the upside. Now, what I like to do typically is anticipate the breakout of the trend line. And now this can be a little bit challenging sometimes, but depending on how you approach it, it also can be very simple. The idea is, especially as the trend line becomes late or becomes more well-defined, if you will, late in the life of the trend line, meaning that you've seen multiple touches, then what I try to do is I try to buy undervalued in anticipation of an eventual breakout of the trend line. Now, we had the news announcement here last week that caused gold to surge down here. I believe that was actually the unemployment report. So this was actually a good buying opportunity down here for different reasons, but we had the rally back up here. Now, once we're at this level here after Friday, then we're looking for moderately undervalued price points to go ahead and enter. And this is really the area right here. I'll put a blue arrow next to this area that we want to look for buying in anticipation of an eventual trend line break of this down trend line. Now, notice last night that if you had purchased here in anticipation of the trend line break, we broke it barely with these two price bars, and then prices came back down and then eventually surged beyond those. So in a case like this, don't give up immediately. Watch what happens, but I wouldn't risk a lot either. If you see a break like this and the market comes back into fair value here, I might even get out as soon as you get back into fair value here. So don't risk a lot in these trades. But when you see the market continue to trade sideways here, the highs of these bars become your new target resistance levels. So instead of breaking right when you break out, or buying right when you break out of the trend line, or expecting the surge right when the trend line break occurs at 1582, call it 90, you're now looking at the highs of these two bars at 1583.60 as your reference point. So this is just one idea. Again, keep an eye on the gold market. This was a great situation. The other thing you could do also is drill down to maybe 30-minute price bars. You can see that in the bars approaching the test or the retest of the trend line, there were several different opportunities here. I'm going to move my blue arrow over just to highlight a few of these, but typically moderately undervalued price points are where you want to look. We actually briefly poked into significantly undervalued, but moderately undervalued price points are certainly very acceptable places to get in. And typically, if you're right about the direction of the market, especially going to test a trend line, these oftentimes represent fairly low-risk entry points. That's all we have for this video. Make sure you keep on watching the gold market for these in the future. As we see these trend lines develop, we're going to go ahead and call them out as well, either on our daily blog or on the video. And oftentimes we'll do that on the Signal Feed subscription as well for our futures clients. That's all we have. Thanks for watching. Good luck trading.